U.S. Jobs Report June 2024. Welcome to the steady-as-she-goes U.S. labor market. Halfway through 2024, job gains are cooling slightly, but overall employment activity remains solidly stable. The U.S. economy added 206,000 jobs in June, the Bureau of Labor Statistics reported Friday, easing from a downwardly revised May tally of 215,000 jobs. The unemployment rate moved a little higher, up 0.1 percentage points to 4.1%, marking the first time since November 2021 that the jobless rate was above 4%. That's not too shabby at a time when interest rates are at a 23-year high, and the Federal Reserve is looking for inflation and overall demand to cool before bringing down rates, said Gus Faucher, chief economist for the PNC Financial Services Group. We're seeing job growth slow a bit. We've seen the unemployment rate tick up a little bit. We've seen wage growth slow a bit, Faucher told CNN in an interview. But those are all good news from the Fed's perspective, should help reduce inflationary pressures coming from the labor market, and should support Fed rate cuts toward the end of this year. Economists were expecting employers to have added 190,000 jobs last month, and for the unemployment rate to remain at 4%, according to FactSet consensus estimates. Government and healthcare again led the way. June's job gains were more broadly based than they have been in the past few months, but the growth was largely concentrated in two sectors, government and healthcare. The largest chunk of job gains occurred in the public sector, which added a net 70,000 jobs, specifically local government excluding education, up 34,100. The healthcare industry added another 48,600 positions. This is another proof point for a steady-as-she-goes labor market where demand is shifting in some key sectors and employers and employees are staying put, Gurr Doyle, Manpower Group's senior vice president, said in a statement issued Friday. Some of the largest job losses occurred in temporary help services, which were down 48,900 for the month, dragging down the professional and business services supersector, which lost 17,000. Manufacturing and retail also saw losses of 8,000 and 8,500, respectively. The temporary help category is often closely watched by economists as it could serve as a forward-looking economic data point in an otherwise lagging indicator. If companies are growing, they'll often get temporary help until they can hire for a full-time position. But if times are tougher, the temp workers usually are the first to go. The sharp decline in temporary help may portend future weakness in the labor market this summer. Jack McIntyre, portfolio manager at Brandywine Global, wrote in commentary issued Friday.